Good afternoon, everyone. Happy Labor Day. If you traded today, I hope you had a great day today. So I'm going to cover today how you can dissect each individual candlestick and kind of see market makers or larger participants, however you'd like to call them, kind of see their hand. And the way we do that is using footprint charts. So not obviously this bear candlestick chart, but let me just talk about this before we get into the footprint. So if you're just normal chart trader, if you will, you can see we've been respecting these clouds, these moving averages, respecting it, become extended, still holding it with touches, and then out of nowhere unwind. Now, if you follow me on StockTwits, I post all my daily plans there prior to market open. I was looking to sell between 40.20 and 40.25, and we came right to it, did not touch it before we unwinded. Now, I still did catch this trade, and I will show now why or how, and that is using footprint charts. Footprint charts, very simply, quite literally, they show the footprint of market makers, market participants, anyone. And what it is just showing transacted volume. So you could use this with stocks, with futures. In this case, obviously, I'm trading the E-mini. So these are contracts. Now, if you're familiar with footprint, or maybe you're not, maybe you've seen them before, footprint charts are highly customizable, as is this program that I use called CR Charts. It's just another trading platform. And it's very customizable. It's unlikely that you'll see one person's footprint be the same exact as someone else's. There can be many similarities, but yeah, it's very customizable, and I have this customized as over the years how I like to use it. So without further ado, how to read my footprint charts. My footprint charts, each of these numbers to the left of the candle, this is contracts being sold at a certain price. And on the right is being bought. But I don't read this left to right. I know it may be a little bit confusing, but I actually read these diagonal like this. So here we have 4,021 contracts bought over 37. So that's a big buying imbalance. Yeah, big buying imbalance. And then on the opposite end, we have 6,820 shares sold under 351 contracts. I'm sorry, I said shares. Contracts. Again, a big selling imbalance. Big difference between 6,800 and 350. Now, how does this help us? So, as I said, I was looking to sell in this area, but we didn't quite reach it. So a few clues that the footprint gave me that was able to help me and actually catch this trade from 1725 all the way down into 39.50. So we're respecting this cloud, we're pushing up, and you could see here volume got very heavy. You could see down here we had good volume, and that's what caused for this push up. But over here we had lots and lots of volume. You could see 10,900, 17,000, 11, 6, lots of volume. And then towards the end, this is what we like to call exhaustion. Exhaustion is when you have these big numbers and then they come to little numbers. Buyers are trying to keep on buying. You could see 17,500 shares, or contracts, I'm sorry, they bought, trying to push price higher. And sellers are just matching them contract for contract until they just cannot transact any volume over here. No market participants are willing to push price higher. And the same here. You could see a zero print. A zero print is very telling that there is exhaustion. And as you could see, we exploded up off of it. So not necessarily a zero print, but nonetheless still exhaustion. So this opened my eyes to maybe we won't make it into my zone that I'm looking for. Now what do I do? Where do I look to enter this trade and still have optimal risk to reward? So this is where I would go, and I did go into a smaller time frame. Here we have the 5-minute, and we had this initial push up, and this is where that 30-minute candle closed down here. So I knew, looking at the footprint chart, that sellers are active up here. Now, if you watch some of my other videos, I talk about a lot, talk about market structure and how price gaps, or volume gaps rather, volume pockets, small volume nodes are very much respected and like to be traded back into. So I knew that there were sellers here, and I knew that there was a low volume node right here. This volume node ended at 1725, and you actually had the zero print to the left of it, that 17.5, obviously 4017.5, I'm just making it easier. So that is where I was looking to sell. Not 17.5, I actually moved it one tick down just to ensure that I got a fill, and you could see that for an hour at this point until here, I still have no fill. But that did not worry me in the slightest. I left my order there. Why? Because as you could see, it might be easier to see through the 30-minute, that sellers were still active. This likely was a large market participant unloading their position up here. And you can see they're happy to keep price here and just keep on selling. Sellers are active, sellers are active. That means I'm still happy to be active here, even though I'm not necessarily getting the fill yet. So we eventually waited, or I eventually waited rather, and got filled here at 1725. A zero print exhaustion, huge confidence in this trade, and I was able to write it down, taking partials along the way until my final exit at 39.50. So as I said, I post all of my plans prior to market open here on my StockTwits account. Let me just show that trade. Here I was filled at 1725. And yeah, so I post all of my not only plans, but throughout the market session, I will be posting what I interpret through the footprint and TPO charts here. So please give me a follow there. If you appreciated this video, if you were to subscribe, it would mean a lot. Hope you guys all have a nice day, and I'll see you guys tomorrow.